We're going to talk today about Cardano. Is it worth the punt? And also, how much can it grow? So hi everyone, welcome to the channel. If you are new, please do subscribe, hit the bell button, like, and leave a comment. And also, check out the links below, social media. But on the page here, I'm doing a little bit of a giveaway. Go to my Twitter, press on the link, do the little bits and bobs, and get entered for a bit of Ethereum, essentially. So let's move on quickly, because there's a little bit of a teasing going on by good old Charles. A little birdie has landed on his shoulder to tell him that February is going to be a good month. Usually reliable. So that is probably something coming out to do with Cardano. Usually. And usually when he speaks, people listen and things tend to move. So this video is all about potential opportunities for investment because we are correcting in the market right now. And I feel personally that these opportunities are worth taking a look at. Long-term investment sort of thing. But in terms of the overall market, let's look on CoinGecko. In BTC values, Cardano has not shown much growth over the last week. It's been consolidating quite nicely. It's been correcting from a previous push a few weeks back. And yes, I do rant and rave on my Twitter a lot. Obviously, if you do follow me, you will know that I get very, very snappy when people are impatient because this market is designed and rewards patience. If you've watched all my content, you will know that. It's how you win. So, relax, chill out, enjoy yourself. Be grateful for what the market gives you and wait for opportunities like this. And we're going to go over in my opinion, somewhat a solid opportunity from a nice correction. And we're still below alt season values in terms of the previous in September, even though the market has grown to over $1 trillion in that period of time. It's not anymore at the minute, but we're going to get there again very, very soon, aren't we? Yes, we are. So let's talk about overall market sentiment before we begin. The market's had a push. Dominance is dropping. It has dropped, it's bounced a little bit. Bitcoin is currently dropping as it stands right now. We're roughly around 31k at the time of recording this video. I did a video at 34k saying we're going to go maybe down to 27k, down to 25, 22, maybe even 20k at worst case scenario. People were losing their shit. But that's the way it goes. Markets do correct. So overall, let's look at Cardano in terms of value. We're currently only at a 10 billion market cap. It's been a lot higher as well in the past. It's got a lot of volume. It's got a lot of interest. Got a lot of, potential investment opportunity coming in terms of institutional investment as well, in terms of what they're building. Obviously, smart contracts are coming. New updates are coming as well. And the little tease by Charles makes it a bit more interesting. We are currently retracing quite heavily in the USD values, as you can see on the chart here, down 7%. Oh, no, actually more than that, 9%. Woo. Anyways. Shall we crack on with some charting? So we'll do USD chart first, just to show you. So we've had a mega push to the upside, as you can see, over the period of like the daily time frame. Weekly time frame, obviously, it looks pretty savage. Yeah, it's coming down. If you look on the daily time frame, we have got some bearish divergences kind of appearing, and it was due to turn around. Bitcoin was doing the same thing, but if we're looking at USD prices alone, obviously the second part of this will be BTC, which is predominantly what I look at more than anything. We've had some monster pushes. Even if you look at the element of this as a Fibonacci, the first real move, pull back into a nice zone, and off it went, rocket launch, right? It was ridiculous. But what we need to look at overall is where can we go now? In terms of that, not much price data in terms of USD values, but in terms of where it's been before, it's been over $1. Okay, it's been much higher in the past, and you'll see this with the BTC chart in a minute. What we need to look at and what we need to worry about overall is where's a possible entry point. Now, if we're looking at the start of this move here, we're already on a first base support line, right? So that is a 23%, basically 32 cents, right? If you can't read that. So 32 cents. That is obviously got to be one level to keep an eye on. Personally, if Bitcoin dumps, and if Bitcoin goes down to 27k and we lose this 30k level, we're going to see 27 cents easily in this because it will literally slap this next level. But this is why dollar cost averaging is important. Now you need to listen to this. Don't just go all in on one position. If you know how the Fibonacci works in terms of profit ratios, percentage ratios of retracements and stuff like that, you will understand that markets will always gravitate to previous levels of support and resistance. It always happens, right? When you put your cursor on this, we've got a level here of basically, it's not much information, but there's a little bit of wickage action in and around this region on the weekly time frame. And if you zoom this on and put this onto the daily time frame, and we go to that level in time, if I just zoom, there we go, you can then focus in on why that level is important. We've had multiple levels of support and also resistance in and around this region. This is where that Fibonacci level for the 32% is potentially going to be living at, which is kind of important when we understand the factors of market structure, which is kind of obviously important. If you want to learn more, and I mean this because I am 100% focused on teaching, if you go into the description of this video and then go down to learning crypto and check out premium, it's a 7-day trial, you will learn this not just from me but from my whole entire team. You will learn how to read a chart upside down back to front as an investor to keep your capital safe, essentially. Dollar cost averaging is a very, very important technique and tactic in terms of using the weekly time frame. Now, I know that I say stuff on my channel, and most of the time it happens, some of it doesn't. When I say to you, why not put a buy order in at 19 cents, you'd probably go, what? Or even 20 cents, for example, just above this 618. The 618 level is key. If Bitcoin, literally, and I mean this, if Bitcoin goes down to say 20K, you're going to probably see these levels get hit. Simple as that. That's just the way the chart goes. It may not happen in the realm that it's less likely, because speculation would tell us that alt season's potentially around the corner. If the alt season moves, it's less likely to happen. So just be careful. But overall, if you're thinking, well, if I'm only looking at USD prices, 27 cents, you could probably go 24 cents and probably 20 cents in terms of potential buying opportunity. This is dominant on Bitcoin though. If Bitcoin dies a little bit and retraces quite heavily and does like a 45% retracement on that previous high, it's more likely to happen. But if that doesn't happen, well, this is probably unlikely. You want to be looking at BTC values overall to purchase, in my honest opinion. But they're potential areas. When you then go and think, well, where can we go from this as a correction? Well, this is where we could potentially reach. Yeah, 48 cents and 60 cents, and obviously higher, but I don't want to go too deep on this chart because for me, personal opinion, I feel that the BTC value chart has got more minerals because dominance is high, it's gradually just dropping. That's where altcoins will get more dominant than Bitcoin, therefore yield more results that way. So this is predominantly if Bitcoin dies. Simple as that, right? Moving on to the main chart, BTC, okay? I've already mapped a little bit of this out to save a bit of time. So what I've done here, essentially, if we retrace this previous move, i.e. the previous alt season, as I said, 1600 Satoshis right there, we literally went all the way up and rejected just before the 618. We are correcting right now. What I'm thinking right now is, well, yeah, that is a potential level, but I think we are going to retrace, and it appears that we are. When we look at this weekly time frame, we've had this top level. I feel that we're going to start correcting in and around this region where this whole level is, where you look at this previous level of interest. If I do this all the way across here, I think this is going to be a very meaty level, in my honest opinion. And you'll see this in a minute. If you make a big zone around that 32%, you look all the way across, it's got levels of support, it's got levels of resistance, it's a meaty level. If that does tap, we're going to potentially see tap into this region, in my opinion, which would be nice. And then for me, we're going to retest and look at the confluence between that extension level to the previous high. And that previous high, by the way, has levels of support in and around that region on the weekly. And yeah, that's all we've got realistically data on the weekly. But on the daily time frame, there'll be a ton of data on that, which would be pretty decent. So that's one way to look at it. One way to just look at it. If I'm doing it from the other way around, and I'm going to show this as well. So if I just leave that arrow there, if I just, let's just say, let me just put this level up here in terms of a level we can potentially target, give or take. You know, if I just leave that up there for now. What I want to do as well is look at where we could go further afield, right? So let me explain this in terms of what about, you know, if we're thinking logically here, we've got this obvious level where, yes, we've done this and cool. But what we need to look at as well is those distance targets for the future. yes, we can correct this level here, but if we're retracing this entire move, and as I've said, we've got this resistance here, we've got resistance here, and ultimately, you know, we've got the wick here. Let's just say the wick. We'll go to the wick for this point. You know, nice round number. But we've actually got all this confluence here with all this. Look at that there, right? This is where things start getting exciting. If this extension level happens, we've got confluence between a previous rejection and a level of support. That's an important level. So basically 1900 Satoshis. From this current range right now, if we're looking at this current live price, and we go to that point, it's an 82% gain. Put that 82% gain on top of any Bitcoin ratio that you've got in this value, it's going to go up in value. But then again, you look even higher. Look at around the 2000 Satoshis. We've got multiple wicks in and around this region. That is also a very important level, in my honest opinion. And then we've got the biggie, the big extension level. Again, multiple levels of resistance have been tapped in and around this region, and it's also been support as well on a few of those levels as well. These are important levels, important. So when we're thinking patience, let's get rewarded. The buying opportunities are coming up very, very soon for Cardano. In and around this 900 level, in my opinion, 900 Satoshis, maybe a little bit lower. And we may well find that this market will get sent to the top upside. So what I mean by this is we've got this whole level where it's going to retrace, but actually if it goes onto the extensions, it will retrace other structure from the past and obviously maybe eclipse it, who knows. But currently it's still in a downtrend. When you technically look at this, it's like formed a load of lower highs, which is fair enough. But if it breaks one of these structures, those extensions are going to get tapped, and that's where big money is. And when we start looking at potential, well, if we go, say, from this 32% range, we're looking at double your money, you know, literally a very, very nice bag. If we look at the likes of the USD prices of Bitcoin currently, okay, and it stays around 30K and you're doubling it, you know, you're going to start seeing a 70 cents, you know, it's nearly a 70 cents Cardano, but maybe even further. It depends on the price of Bitcoin as well. So I think, in my opinion, overall, I think this is majorly undervalued. If you want to learn all this Fibonacci stuff, obviously check out the links. But when you start neating it up and you think, well, here's your, oh, what did I deleted something there. When you start looking at the fact of, right, where can I get in? There's a potential level here. Where are the exit targets? Cool. These are levels of resistance to look out for, but these are the extension levels to go for in terms of potential levels where things can stop and turn around. Obviously, you don't have to have all of them on there. You can make it a bit neater. But if you start thinking previous levels of structure, it's here, and it has confluence with the Fibonacci, it's important. When you start thinking support levels, it has load of levels of support and resistance from the past. Good level. It's a 32% retracement level as well. And then you start thinking, where's the resistance? Well, the resistance is obviously here. Fibonacci is telling us that. Resistance is here. Fibonacci is telling us that as well. It's important. So, I hope you enjoy. I know it can be a mindfuck. Let's just say mindfuck. It's crazy. So, overall, I think this is undervalued. I think there's at least 100% gain here, at least minimum. But I also think that this level is going to get breached at some point. It's got to go towards that level. But the better you buy, the easier life is. But this is a nice divergence here. The bulls show the reversal. We're now in an impulse. We're going to correct down and probably shoot in the next few days, in my honest opinion. So be patient, enjoy the market, and yeah, this setup looks pretty decent.